Good afternoon. Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Thursday, April 28th, 2011. Grains, significant pullbacks in those markets today. Couple explanations as to why. One of them is end of the month liquidation. We saw some profit taking from the longs today. Another reason out there that some are using, we saw a reallocation of funds from the grains over into metals and natural gas today, as we saw silver get close to its all-time high and gold continuing its march on upward as well. Natural gas also putting in a significantly higher bar on the charts today as well. But like I said, that was all at the expense of the grain markets today. Corn finishing limit down in July, down 30 cents at 7.29 1/4. There is a gap down there at 7.22 that we have our eyes on now, and we will see expanded limits starting tonight at 6 p.m. in the corn. 45 cents will be the limits for the next trading session. Soybeans down 31 today in July, 13.53.5 is where we settled those guys up, and wheat down 34.5, 777.5 was settlement in July, Chicago. Wheat did lead the charge lower today. We opened up pretty steady with where we finished with the overnight trade, and then it was literally 2 minutes into the day we saw wheat break hard, followed closely by corn. Soybeans did at one point today manage a little bit of a move to the upside, but that was quickly sold off as well. So all the grains finishing significantly lower. Corn taking the brunt of the run, down limit today, and we'll trade 45-cent limits tomorrow. Now this occurred today with crude oil for the most part being stronger and the dollar significantly weaker, which are usually outside market indicators that grains will find strength. Today that didn't happen, so those in ethanol production facilities should feel pretty good about the fact that they can produce cheaper ethanol now with corn being 30 cents lower and crude oil prices remaining the same. Keep an eye on ethanol margins as well as we try to get a feel for where corn's going to go next. When are they going to come in and buy, and how much of it are they going to gobble up at lower prices here? Over into the livestock, the feeders finally traded the way you would expect them to, with corn moving one direction or the other. Typically, they've been moving hand in hand. Today, corn broke hard, and the feeders rallied really strong off of that. Feeder cattle up 97.5 in the May at 131.37.5. You got fat cattle down 35 today as the cattle market pulled back a little bit from yesterday's correction to the upside. Down 35 in the June cattle, 113.20 is where they settled up. Hogs down 20 cents today in the June at 96.50. So going into tonight's trade, what are a couple of things we need to be looking at? Number one is where's this crude oil and dollar going? Okay, the dollar is set to test its 2008 lows at the levels it's trading at now, and crude oil remaining pretty steady. We haven't made really a run to be mentioned towards that 116 area, which was the nearby high that we've seen in that crude oil. We also haven't really seen it fall apart. So not getting too much direction from the outside markets, but you always got to keep an eye on that dollar. Keep an eye on the metals as well. As the dollar pulls back, we're going to probably continue to see gold and silver continue rallying. And weather, is still bullish. We've had some reports today come in. Clients out in Nebraska are planting today. But then you got areas down south into Missouri, central and southern Illinois, central and southern Indiana, where there's standing water in the fields, and field work has been at a halt and probably will continue to be so into next week. So the weather right now is friendly on the grains, and until we get some progress numbers up over 50%, I really wouldn't be willing to change my personal opinion on what direction the grains should be going. However, money flow at times will go ahead and make you think twice about your decisions, but fundamentally, the corn market specifically should continue on higher and should catch itself somewhere near where we're at right now, with some good technical support underneath these nearby contracts, as well as the December contract. I believe the number right now is 620 is the projection from the double top that we saw in that December corn contract. Projects on down to 620 now that we've taken out the 652 support. So that's a price point I'd look at, as well as 722 in the July corn. That's about it, aside from the fact that today gives us, or days like today gives us reasons to justify continuing to hedge in markets when they're running up. And for those of you who may be feeling the same way, that you don't have enough sold, what if this corn market doesn't catch itself sometime soon? What should I be doing? Feel free to call in here and talk with a broker. Phone number is 800-262-7538. We do have plenty of hedge strategies we'd be more than willing to share with you. And you can also go to our website for information regarding our outlook on grains and grain prices. That website is www.allendale-inc.com. Thanks for tuning in today. My name is Bob Dalton, and I'll be talking to you again very soon. Take care.